Look, when it comes to choosing a loan officer, there's a lot of things you need to take into account, right? It's not just about rates and fees. And in this video, I'm gonna break down the top 5 warning signs that you're working with a bad loan officer and you're gonna have a horrible mortgage experience. Before I do, please subscribe to my YouTube channel to keep up with more videos like this. Number 1 is they're gonna take your information over the phone. The truth of the matter is nobody should be taking your information over the phone. There should be a secure online portal to get your information. You don't know where that information is. It's laying on their desk. You send it over text. It's just a bad business thing. But here's the other reason why it's bad. There's a lot of important questions in a mortgage application that you need to fill out because you know the answer to. And a loan officer asking on the phone could miss those questions. Some big ones are, do you owe the IRS? Are you on a payment plan? Do you pay child support? These are things that over the years I've seen other loan officers miss because they collected the information over the phone, trying to make it quick and easy, and didn't ask the right questions. So if they ask you to do that, warning sign right away. A soft credit pull. I understand, and this is all the rage. I want to do a soft credit pull instead of a hard one. I don't want to affect my score. The truth of the matter is you cannot get pre-approved on a soft credit pull. Every mortgage has an automated loan approval system. You have to do all 3 bureaus. You need to do at least 1 credit pull to get all 3. And do it right to get an automated loan approval. Back in the day, you would see loan officers pull a credit report and then just eyeball it and say, yeah, you're fine, no issue. But not do the automated loan approval, and then down the line, they would do it and the loan would get denied because it didn't get approved. I'm seeing the same things when it comes to soft credit pulls. You're trying to avoid that one credit hit, which is really not gonna hurt your credit score. And more importantly than that, you're going in the wrong direction. You're gonna get surprised later on and may get denied. This is also true if they're only pulling 1 bureau and not all 3. They're either doing it to save costs on their end or trying to make you happy. Both things are gonna bite you in the behind later on. That they don't exist. Anytime you're dealing with an individual in the mortgage business, you should be able to Google them and find them. You should be able to see Google reviews, see what company they work for, see what's out there about them, their experience, things like that. If you're dealing with somebody that you have not heard of, can't find, when you Google them, that's concerning. Are they new? Difficult to reach. If you're having a hard time getting a hold of your loan officer during the loan process, even the front end, that's a huge telltale sign that you're gonna have a bigger issue into the process. What happens if you need updated estimates on a house before you make an offer and you can't get a hold of them, or they're slow to respond? That's going to be a concern. You could lose out on the house. You could have problems later on because of their poor communication. And here's one that's very sneaky, and I see a lot of them do it. When they pre-approve you, they only send the letter. Wells Fargo is known for doing this. So they'll pre-approve you, here's your pre-approval letter, and they'll put a rate on there. Let's say it's 6.5, even though the market rate may be 7.5. They do that for a couple reasons. 1, to draw your attention, so if you do shop, you don't have any of the details that you need to know. How much money do I need for closing? What is the cost of the rate? What are the fees? All of that. So by only sending the letter, they're limiting the information you have, so you really can't shop them. Thinking, hey, I have a pre-approval letter, I'm good to go, and not knowing any of the details. You should be receiving full-blown mortgage estimates with costs, fees, the rates, rate options, what your total mortgage payment is, how much you need for closing. So right away, if they don't give you that, that's a very shady tactic. Rocket Mortgage also does this because then you can't really shop them. Hey, I did my part. I'm pre-approved. I'm good to go. And that right there is the 5 signs that you're dealing with a really bad loan officer and probably going to have a horrible mortgage experience. Hope you found that information helpful. If you did, I'd love to be your lender, and stick around for this next video. I think you're going to like it. Thanks, guys.